Real estate in the GCC has evolved significantly. It was primarily been driven by government and private offices, and is now driven by a more reliable and diversified source of liquidity such as capital markets, FDI, and end-user proceeds. As the real estate market evolved in the region, a significant number of privately owned real estate companies have entered the market. This has provided an element of diversification and depth in terms of diversity and build quality. The region's real estate sector has been a beacon of stability in relation to the other global countries which have been struggling with high inflation and stagnant growth. 2025 will be a continuation of what we've seen in 24 and 23 in terms of GCC based on the GDP growth that we're expecting during that year. Inflation has also been maintained at a far lower level than what we've seen globally. And if you look at those two parameters, this particular region is going to be very conducive for the local, regional, and global investors to continue and increase their investment here. The recent GCC real estate report by S&P illustrates that 85% of the publicly rated real estate companies in the region have a stable outlook, which further evidences the fact that we do foresee a continuation of the growth that we have seen in the last few years. Another fact that further shows the expected growth in real estate going forward in the region is that underdeveloped and designed projects accumulating to approximately $1.68 trillion US dollars, 63% in Saudi Arabia, 24% in the UAE, and the remaining in the key GCC countries. Historically, most of the GCC countries have pivoted away from just being dependent on oil to emphasizing or increasing their reliance on other industries such as real estate, tourism, and logistics. And this has been transformational for these three industries in the region itself. Going forward, I do believe that the growth will continue in terms of real estate, owing to the continued investment by the government in infrastructure, tech, and sustainability. Fundamentally, real estate is an attractive proposition in terms of investment because of the capital appreciation opportunities, the ability to earn revenue through rentals, the fact that it provides diversity to an investment portfolio, and lastly, because it's a great hedge against inflation. The reason why the GCC has been a compelling investment is because of the growth that the region has seen over the last few years, stabilized income generation, capital appreciation opportunities, safety in the region itself, and of course, tax incentives. Going forward, I do believe that it is going to be a strong proposition based on the level of investment that the government is putting into infrastructure, improvement in the social and economic parameters to attract an increased population in the region, stronger yet more flexible regulations, enhanced investment/freehold zones, and lastly, providing a more conducive environment for investors to come in through a stronger legal framework. As the world is becoming increasingly conscious about greenhouse gases and climate change, real estate development is becoming far more sustainable, and the built environment is becoming increasingly greener. The climate change impact was materialized through the Paris Agreement, and in 2023, the key GCC countries such as Saudi, UAE, Bahrain, Qatar ratified that particular agreement, which gives you evidence of the support that the region wants to give in terms of sustainability going forward. Practical evidence has also come in through some of these countries which have been extremely supportive of this movement. For example, UAE has come up with Masdar City, Qatar has come up with Lusail City, and both of them are using the technologies in order to go ahead and conserve water enhance their reliance on green or clean energy, and provide clean transportation options. If you look at Saudi, the 2030 vision that Saudi has, that is also pushing towards a greener economy, safeguarding the environment, more reliance on clean energy. Again, the two projects which stand out are the Red Sea and NEOM. NEOM is going ahead and developing a substantial amount of the project using the footprint of sustainable living. While if you look at the Red Sea developments, they're providing natural destinations which will not only maintain but also enhance the environment, along with total and complete reliance on renewable energy and zero waste to landfill policy. Investors are willing to let go or shave off a certain percentage of the returns to go ahead and invest in sustainable assets. It is the socially responsible thing to do. Even if you look at borrowers coming into the market, you're seeing increased number of green bonds and green sukuks being placed in the region, and it's taking a substantial momentum away from conventional forms of raising capital. Even if you look at the UAE banks, there is a huge emphasis on sustainable funding and sustainable lending. It's happening in all key segments of the economy. You're seeing an increased amount of interest coming in from the international markets, and that dovetails into a significant increase in sustainable financing and sustainable investor interest. So as far as the region is concerned, I see nothing but upside in terms of that particular part of liquidity. So Mashreq's platform is very unique. It's very different from the other GCC lenders. And the reason for that is it's got its own real estate vertical in terms of lending and advice. The first vertical is the escrow or trust account area. We as Mashreq were pioneers in that, and we have gone ahead and increased our market share significantly, and we are a major player in this part of real estate activity. The second activity is obviously coverage, and that is where the key UAE relationships are housed and managed effectively through the entire bank. The third one is your structuring and advisory team. Now, this particular team includes people from different facets of real estate rather than just pure banking. So, for example, we've got RICS qualified individuals coming in from different companies such as John Land LaSalle and E&Y. We've got project managers coming in from some of the largest real estate companies in the region. And we've got real estate specialists coming out of different segments such as retail, residential, office space, and hospitality. What this does is it provides us a richness in terms of the understanding of real estate in the region. That dovetails into providing effective solutions for our clients. And if you look at our performance over the last 7 to 8 years since we've gone ahead and set up all three verticals, it has been a very, very effective tool to go ahead and enhance our market share, provide solutions to our clients which they are looking for, extremely proactive, and therefore be very effective in terms of risk management for the bank. So it's a win-win situation for all.